Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. We have a very strange time at the market, at the world at all. On the one side, the economy really struggled with the pandemic situation, and on the other side, the stock market rise from one all-time high to another. It seems like this can't continue forever. It also seems very likely that we will have a stock market crash somewhere soon. The stock market and the real economy just go into totally different directions. Everybody wonders about how long can this go. And also when we look at all the metrics, it seems like the stock market is highly overvalued. Sven Carlin, one of the best YouTubers in the financial sector, just made this very clear in his latest video. I put the link here down in the description. And when you look at this table, you see at almost every number, the stock market seems overvalued on the highest level ever. And also when you look at the Buffett indicator, it seems like it's strongly overvalued right now. And so the question becomes, how long can this go? And of course, what to do with your positions in your portfolio, because it seems like it's just a question of time until this stock market bubble will burst. And of course, nobody can predict that. It's impossible. With the cheap money all around the world, it's also possible that this stock market rally can just continue for some months, years, whatsoever. And of course, also this rally on the stock market is very driven by the tech stocks, first and foremost by the FANG stocks. You see here the performance of Apple, Amazon, Microsoft, Google, and Facebook. And you see the rest of the market is almost even, because the remaining 495 companies in the S&P 500 have just a performance of 1.1%. And on the one side you have the tech stocks, and I made a lot of videos about the tech stocks and give you my opinion on them, and all of them seems way overvalued right now. You find for every of these stocks, for Apple, Amazon, Microsoft, Google, and Facebook, videos on my channel. Check this out. And on the other side you have, I will call it, the old economy. And the old economy struggles a lot, of course, but it seems like there are also some companies undervalued or just on the intrinsic value right now. And with the stock market rally, and I was lucky enough to buy into a lot of these great companies just in March and April in the depth of the pandemic situation. But with the rally since then, I sit on a lot of gains. The question for me was what to do with that. And so I just took a look on every of these companies. What's the value? What's the intrinsic value? What is the current price to the intrinsic value? And then decide if I want to take profits or not. Because as I tried to explain in my other videos, there are just two reasons to sell a company. First of all, when my investment thesis doesn't work and when the business model doesn't work as I thought and the whole game change, then it's a reason to sell. Or when the price is way over the intrinsic value, then it's also time to sell a company. And so I just looked at all of these companies and looked what's their current price and what their intrinsic value and how far they are over the intrinsic value already. And when I did that, I created this list. Now you see here, first of all, the intrinsic value of every stock in my calculation. This is with a discount rate of 12%. This is my expected return. 12% is my expected return. And then you see also the distance to the intrinsic value right now in percentage. All the minus is when the companies or the stock prices of the companies is over the intrinsic value. And the positive numbers is when they are under the intrinsic value. And so we see that, for example, Autodesk is 57.3% over the intrinsic value, Facebook 38.5%, and so on. With this list, I just tried to give myself a perspective and decide what to sell, and also on the other side, maybe what to buy. And with that, I decided to sell my Autodesk shares for $275.27, and I sold because it's just way overvalued, and even under the most positive circumstances when I calculate the intrinsic value, it's really way overvalued, over 50% over the intrinsic value. And so I decided to take these profits because I think there are better options in the market. And I also sold Medtronic for $114.12 per share. And also here, it's not that much, but it's also over the intrinsic value. And also here, I think there are better chances in the market. And so I took my profits in Autodesk with 56.7% and Medtronic with 6.75%, or overall a little bit over $900 in profits. And here you see there's not so much movement in my portfolio, so I just sold 5 stocks so far this year, and this was Adobe, FactSet, Facebook, Medtronic, and Autodesk, all with more or less profit. And the reason why I sold, want to show here again, my buy price for Autodesk, for example, was $175. This was at this time right on the intrinsic value, and now it's 57.3% overvalued. And so it was time to sell. And Medtronic, I bought even over the intrinsic value, and it's now almost 30% over the intrinsic value. And especially with Medtronic, I wasn't follow my strategy right from the start. And so I see Medtronic more as a mistake when I bought it, because it was just too expensive when I bought it. But in this bull market, even if you make mistakes, you still can make good returns. But this is not all the time the same. And so I'm happy I'm out of Medtronic at this point, even if it's still a great company, and if I can't buy it under the intrinsic value, maybe again, way under the intrinsic value again, then I would think about that. And the same is also for Autodesk. Autodesk is a great company. They just made the turnaround. If there is a chance to buy them again under the intrinsic value and well under the intrinsic value, I will do this for sure, because nothing changed. Both of these companies are good companies. They are just too expensive for me right now. And so my current portfolio looks like this. If you are new to my channel, you find a deeper analysis for all of these companies on my channel, where I took a look into the business model, the management. I calculated the intrinsic value, and then I explained when and why I bought into these companies. I also give you every week an insight on my real money portfolio, and with this, I'm one of the few YouTubers who give you insight of their real money portfolio. The pie of my portfolio look like this. I'm quite happy I sold 2 positions, because overall I still think the portfolio is too big. There are too many positions, but I'm very happy with all of them, so there's no need to sell any of them now. And with the selling of Medtronic and Autodesk, also my cash is up to now over 19%. This is how it looks right now. And so far, since the 2nd of December, when I started this North American portfolio, my portfolio have a performance of 34.87%, which is quite a nice outperformance to the S&P 500, which have a performance of 16% since the 2nd of December 2019. And so I'm very happy so far, and we will see how this will work out. But this outperformance for me is very impressive, even more because my portfolio has not this much of tech. I'm quite happy so far. Next question is, what's next? And with almost 20% cash, I will of course look for opportunities and chances. And the first thing I do, I'll look into my own portfolio and see where are the chances. And you see, there are some companies which are undervalued in my opinion. I will invest step by step in Berkshire and Intel and will build up these positions. I think they are still good chances over the long term. And also, of course, you can say, oh, okay, Air Canada is well undervalued, or also Wells Fargo is well undervalued. I will not add to these positions because Air Canada, of course, as an airline, is high risk right now. It's, I would say, the only very high risk position in my portfolio. So I will not add to this. And also Wells Fargo, of course, if they can make the turnaround, there's a lot of potential, a lot of upside, but I'm not so sure about this. And so Wells Fargo is maybe not high risk, but it's still risky. And so I will not add to them. And also I will not add more shares to Imperial Oil, IMO, because with IMO, with Imperial Oil and Chevron, I have quite a stake in the oil sector. I will not add to this. And so that's a plan for the next weeks or month. And of course, if there will be new chances, then I will maybe build new positions. I have a watch list with around 10 stocks, and of course if there are chances I will take them, but of course it's very difficult to find undervalued stocks right now in this overall high valued market. I think really overvalued market overall. And so, as I said, my goal is to buy step by step Berkshire Hathaway and also Intel and add up more shares of them. My goal for Berkshire is to have at least 10% of my portfolio in Berkshire because I think this is the most solid investment over the long term and still at very reasonable price. And as long as they are the current price or even lower, I will add step by step. And the same is with Intel. Intel is still a cash machine. I will also add to them. So that's it for today. Thanks for watching. If you liked the video, please subscribe to my channel and join me on my road to financial freedom. And if you really liked the video, please give me a big thumbs up and ring the notification bell to never miss another video. And then we will see you the next time with another analysis of another stock. See you then. Take care. Bye bye.